Really, in a few weeks, we might get that first Fed rate cut after a long period of these elevated interest rates. Do you think the Fed would be sowing the seeds of another boom and potential bust like you're suggesting?
Well, I can be a little bit cynical at times, but I have, let's just say, over a year ago predicted that in the run-up to the presidential election, no matter what the conditions were, that we were going to see a rate cut anyway. And that goes to your last question, too. The idea of Fed independence, I think, is itself a little bit of a myth, even in the current status quo. It looks like it's independent. But just because it has the appearance of independence doesn't mean that that's actually how it's behaving. It's always been affected by politics. The only question is how transparent that really is. And so I'm not saying that now. I've been predicting this for a long time. Lo and behold, what do we get? The 2 months leading up to an election looks like we're going to get a rate cut. And I think that that's no surprise. Now, what's going to be the consequence of that? Look, I think the Fed was too slow to raise rates. I think they've been too slow to cut rates now, so you could make economic arguments to support it. But I do think that if people pretend like politics and the upcoming election isn't playing some role in that calculus, I do think that that is a bit naive when we look at the realistic way in which a lot of these agencies, including the U.S. Fed, have been run for as long as they've existed.
A few moments later.
50 basis point rate cut. The Federal Reserve slashing its benchmark interest rate by a half a percentage point to a new range of 4.75% to 5%, marking the first rate cut in more than 4 years. Now, Fed officials see 2 more 25 basis point rate cuts this year, followed by 4 more cuts next year and 2 more cuts in 2026. Breaking down what officials saw, 9 officials saw 4 cuts this year, so that includes the 50 basis point rate cut today. 7 saw 3 cuts. 2 officials saw 2 cuts this year, and 1 saw 5 cuts.
All right, guys, so we got to talk about the economy, more specifically the Federal Reserve, because they just made the most obviously political move that I've ever seen in an attempt to save Kamala Harris's chances of becoming president of the United States. That's exactly what is going on here, because they decided to issue a historic rate cut that will lower interest rates in an attempt to save an economy, a labor market that is about to fall through the roof. Okay, we are headed towards a recession. Okay, we're seeing mass layoffs, okay, happening across the country. And it's much worse than the government numbers like to admit. And you know this because Jerome Powell, the Federal Reserve, felt the need right before the election to lower interest rates in an attempt to, again, prevent the economy from collapsing, okay? And that is what's happening here, which is something that I predicted along with many others, because this wasn't really a hard prediction, but I saw this coming way back in February.
Flashback.
Yeah, I personally think that the Fed is going to probably end up cutting rates going into the presidential election to try to juice some things up. I think certainly the market thinks that. I mean, the S&P 500 is up 6% year to date. I mean, they seem to think that the Feds are most definitely going to cut rates, even though, again, it seems like inflation's not really pulling back as much as they had hoped. Now, I mean, we could put ourselves in a situation where if the Feds do cut rates too early, I mean, we could see inflation continue to go up and not come down. I mean, that's the situation that happened in the 70s where you had, the Fed stop raising interest rates too early and we paid for it. And that is a situation I think Jerome Powell is trying to avoid. However, at the same time, I think the political influence is also there as well, too. So I don't know. To me, it's a very weird situation. And they're trying to do this in order to change people's perception of the economy and what is happening, right? Because when the Federal Reserve lowers interest rates, what happens is typically, at least in the short term, the stock market will go up, okay? Because the cost of money is cheaper. You have businesses, they'll be able to invest, stimulate more economic growth. And also there is some relief for consumers as well, too, who are dealing with a lot of debt, okay, in which you have to pay a lot of interest.
Car loans, 5.2%, credit card interest rates, which are always terrible. Look at where they are today. So the idea of the Fed cutting interest rates would be these numbers would start to come down. You can see mortgage rates have already been falling in anticipation of the Fed cutting rates. They'll likely continue to fall. A lot of really smart people I know say you're going to have a 5 number there sometime maybe early next year, or even late this year. So for those people who are looking to buy a home, if you can find one in this tight housing market, or trying to refinance more likely, likely. If you've recently bought, that's going to be the first place you're going to see the effects of lower interest rates.
So how bad did things get? Like, do you have numbers for, because we talked so much about how, I just said it a second ago, how expensive it is to go to the grocery store. We know gas prices are falling, which is great. So tell us about what we saw in the improvements.
I mean, when you look at the vibe session, people feeling terrible about the economy, this is why. You had housing inflation, 8%. Gas prices at the worst were up 41%.
Yeah, so a lot of you guys may be asking, what is the problem? What's the big deal with the Federal Reserve lowering interest rates, right? This seems like a great thing. And it could be a great thing at the right time. However, in my opinion, I think that the timing on this is a little bit too early. And the reason why I say that is because the feds have not completely got control of inflation, okay? They have a dual mandate, which is to maintain full employment while at the same time keeping stable prices, aka low inflation. The current inflation rate is 2.9%, which is still above the 2% goal of the Federal Reserve, which means that they haven't really taken care of inflation, right? They haven't stopped it yet, okay? And I'm pretty sure a lot of you guys are still feeling it, right? I mean, I think that the government numbers are much better than the actual numbers, right? What people are actually feeling. So with that being said, when you lower interest rates before getting control of inflation, you're risking that inflation could get out of control again. Inflation is like a fire. You got to make sure that you put it out completely, okay? Or else you take the risk of those small flames that are still burning, reigniting and getting out of control again, okay? And that is the risk that Jerome Powell decided to take when he issued this 50 basis point rate cut, which is a huge rate cut. Like, that is actually quite a bit, okay? And that to me signals that the economy is in bad shape, right? Because if the economy was great, which is what the Biden administration and Kamala Harris love to tell people, then there wouldn't be a need for a rate cut that is this dramatic, okay? These are the type of rate cuts that you get before the economy goes into a recession, right? Just look at what happened in 2007, 2008. You had the same type of pattern, right? This big rate cut right before the economy collapsed, right? So I'm not saying that's going to happen for sure. My point is that the Fed's doing this, one, is political, but also a bad sign for the economy because it signals that the economy is not as strong as the Biden administration and Kamala Harris is claiming it. And also on top of that, people are spooked at the possibility of Kamala Harris becoming president of the United States and her tax and spend policies that are going to just make inflation worse. The last thing that you want coming out of a very inflationary period is to have a president that is going to basically make it worse with her spending policies while also lowering interest rates. It's not what you want if you want to stop inflation from reigniting.
If Harris was elected, I would pull my money from the market. I'd go into cash and I'd go into gold because I think the uncertainty regarding the plans they outlined would create a lot of uncertainty in the markets.
You're on board with that, Kevin, I think. It would be bad for the markets, a Harris win, right?
Well, it depends what happens between now and election. If she came out tomorrow morning or even this afternoon after the Fed decision and said, here's my 10-point plan specifically around taxes, around these plans she's been talking about. The housing, $25,000, I was just kidding about that. That's so inflationary, it's stunning. I can't even imagine that ever being permitted in Congress. Even if she won more seats in the House, no one would ever do that. So these policies are crazy. I'm not that as an extremist. I mean, I do have gold. I do have a lot of cash sitting around because of uncertainty. But I have to invest the day after, even if she is elected. And then I have to hope, I have to cross my fingers, you know, this is the new boss and we won't get fooled again. And that these policymakers that are giving me this just be happy, well, maybe I'm going to have to get happy. But right now I'm not happy. And I really, really want some policy. I really do. And I think the rest of the market does too. And that comment gives you some idea about how much angst there is out there.
Are you worried about the future of the U.S. economy? With so much uncertainty in the air, it is natural to fret about the security of your retirement savings. However, there's one asset that stands the test of time, and that is gold. For centuries, gold has been a hedge against market volatility and economic instability. With a gold IRA from Noble Gold Investments, you can harness the power of precious metals in order to secure your financial future. By rolling over your existing IRA or 401k into a self-directed gold IRA, you can enjoy the potential for long-term growth and stability. Diversify your portfolio with a tangible asset that has real value. Setting up a gold IRA with Noble Gold Investments has never been easier with its streamlined process and expert guidance. This election year, do not let the volatility and uncertainty keep you up at night. Vote for the timeless safety of gold and silver in 2024. And Noble Gold Investments will give you up to 10 1-ounce silver Trump coins or a 10-ounce silver American flag bar if you open a qualified account. Go to noblegoldinvestments.com now. That is noblegoldinvestments.com. And just remember, there's a risk with every investment and there's no guarantee of any kind. Yeah, so a lot of smart people are concerned about what Kamala is going to do. And I would be extremely concerned as well, too, because as interest rates decline, if you get somebody in office, okay, that is going to start spending more money, we could see ourselves in a worse situation than we were just a couple years ago, okay, with peak inflation. I'm telling you, I like the fact that people are getting relief, right, as people should get some relief, but you cannot have the next administration spend a whole bunch of money as the feds are lowering interest rates. It's not going to be a good idea. So without further ado, I actually want to react to this clip from Charles Payne in Fox News going in more depth about what's actually going on with the economy here amid these rate cuts.
Hand ringing is loud and clear. Joining me now, QI Research CEO, Chief Strategist Danielle DiMartino Booth. Just, Danielle, your initial reaction when you heard that.
For the first time since Paul Volcker, I will tell you that Jerome Hayden Powell defied the markets. They've never gone with less than a 79.8% probability of a move, one way or the other, and they went today at 61%.
But here's the thing I kept telling people. At Jackson Hole, that whole week leading to Jackson Hole, every member that spoke said gradual, gradual, gradual. Yep. I feel like he deliberately did not use that he kept the door open for this move.
He absolutely did, and he orchestrated this purposely, but he defied the markets. Charles, this is a good thing.
Let's talk about historically now. Okay, our first rate cut, going back 14 recessions. By the way, our buddy Kobasi put this together. I think it's fantastic. The unemployment rate in the past year, typically going into an unemployment rate that with the recession, right, up 9%, without a recession down 10. So look at this. I mean, the unemployment rate is rising so much faster than normal before first rate cut. Right. Real GDP, this is actually pretty good. You know, I'm going to change. I'm going to do this differently. I'm going to call that a red flag. I'm going to say this is okay. But look at this. The debt, U.S. debt up 123%, obviously a red flag. Right. Savings rate has plummeted 2.9%. Yep. Normally it's 8.8%. So again,
you had a
lot of red flags here.
A lot.
Yeah, there are a lot of red flags. And this is why, you know, again, they're doing this because they know that the economy is weak, right? You don't do this in an economy that is strong. But that savings rate is something I've been talking about quite a bit. It tells you everything you need to know about how people are actually doing. If people cannot save money, and also on top of that, you have historically high consumer debt. What does that tell you? That tells you that the economy is doing so bad that people are having to leverage, to borrow more money just to get by. And they're not saving it, right? They're not saving it at all, okay? That's how bad things are. And when you look below the hood, when you actually look at some of these actual numbers, right, the ones they don't really like to talk about on CNN, MSNBC, we're not in a good position right now.
Absolutely. Charles, the U.S. economy is not prepared for what the polls are telling us is going to be gridlock in terms of emergency measures, blowing up the deficit spending to alleviate the recession. We are not in a good place going into this as we have been historically.
Let's talk about another thing. I'm going to pick up a little bit on this. So the economy, right? One thing we talked about is savings. Foreign net savings, that's in the blue. When you just talk about a U.S. savings.
Net national savings, yes.
Negative. That's negative. I mean, how can an economy, this is not a soft landing. We just continue to consume more than we make.
No, I think Wall Street wanted to believe the soft landing narrative so badly that, as you said, only 9 out of 114 were even willing to go to 50 basis points. But that way you just circled, that's reality.
Yeah, well, a soft landing, just so people understand what a soft landing is, that's the Federal Reserve trying to gradually increase interest rates, but not so much that it completely tanks the economy immediately, right? So they try to basically hurt the economy enough to bring down inflation while also avoiding a full-blown recession. Now, considering how some people are feeling right now, you could say that maybe they didn't avoid a soft landing, right? Who knows? But the fans are saying that, hey, it looks like they're going to have a soft landing where they will be able to not cause inflation to get out of control, right? While also at the same time maintaining full employment, right? And making sure that at least the top line government numbers are good, right? So we will see. I personally think that depending on who gets into office, okay, and the spending that they decide to do, how much spending they decide to do, that's going to determine whether or not these rate cuts are going to be helpful or hurtful in the long run.
So Jay Powell saw this. Bowman didn't necessarily see it, but she was always sort of giving off hawkish vibes.
He was going to get a dissent either way.
You made up a great point in your note, and I wanted to share it with the audience, right? With respect to recessions, right? We talk about, consumer spending and that being sort of the gauge. You say, no, look at private fixed investment, the blue line. Going back, these are historic recessions. That blue line is almost always, it's always been negative. Where is it now?
Where
are we now with the private fixed investment?
12 out of the last 13 months, we have been negative on a year-over-year basis. It determines 93% of recessions. Right. 93%. Not consumption. You can be in recession, as you can see, with consumption still growing.
So private fixed investment, if we had to draw the line, it'd be somewhere like that right now.
Correct.
So what now? What do you want to hear? Powell's going to come up. I know you're going to join me later on. We'll try to analyze what he's saying and, of course, market reaction. What do you think he'll say, though? Because to your point, a lot of people who bought into 25 said, well, the signaling that he didn't truly telegraph it, or that somehow the markets are going to panic that the Fed went off script or Powell's gone off script?
I think that Powell is going to speak hawkishly and say that they are moving preemptively and that he still believes that he can engineer a soft landing. That there was a real discussion, as we saw on the air last meeting, there was a real discussion about a rate cut in July. Right. And all they're doing right now is making up for not having cut in the July meeting. Nothing. He's going to keep it very simple and maintain, I am data dependent going forward.
So, but what is it about the data that some folks say he shouldn't have gotten a 50 signal? What is it that, does he know something, though, about the data that's in
the pipe? They're saying the consumer's still spending.
Right.
And history, this is a Dallas Fed January report, says it doesn't matter if the consumer is still spending. You can still veer into recession.
As we have done many times. All right, so I want you to come back later, sit on the panel as we listen to the Q&A.
Yeah, so also what he knows is that Kamala Harris is struggling, right? She's struggling. And because she's struggling, this is that juice that, maybe, Kamala Harris could take advantage of, okay? Because, again, the market, at least in the short term, probably will grow, okay? Because of this, a lot of this is already priced in. People have already placed bets off the Federal Reserve cutting interest rates. But a lot of people didn't think they'd cut them this much, right? A lot of people were saying 25 basis points, not 50 basis points. But 50 basis points, in my opinion, signals panic, right? It signals that, this economy is headed towards a recession, if not already in a recession. We know they changed the definition of a recession to not make Democrats look bad. So it's really hard to say. But what I do know is that the American people are struggling, okay? And we will see the long-term consequences or benefit of this rate cut, I think, depending on the next administration and their fiscal policy. So let me know what you guys think. Make sure you like, comment, and subscribe. Most importantly, share a Black conservative perspective. Peace.